Your investment portfolio is like a passport. Each stamp adds new flavor and opportunity. If yours is still missing the buzz of high-growth regions, meet EEM, the iShares MSCI Emerging Markets ETF. First, what is EEM? Think of it as a giant shopping basket packed with shares from more than 1,000 companies across fast-growing nations. Instead of juggling individual stocks in Taipei, Mumbai, or Sao Paulo, you grab one ticket and ride the entire emerging markets train. EEM's mission is straightforward. Mirror the MSCI Emerging Markets Index, which tracks large and mid-sized businesses in developing economies. This copy-and-paste approach makes EEM a passive fund. It doesn't attempt to outsmart the market, it aims to follow it efficiently, keeping costs and surprises low. What's inside the basket? Picture the sectors as stalls in a bustling night market. The technology stall glows brightest. Chips from Taiwan Semiconductor and mobile giants like Samsung represent roughly a quarter of the basket. Right next door, banks and financial services claim another quarter, collecting the coins that fuel these economies. Walk further and you'll find consumer brands, telecom towers, factory floors, energy pumps, and healthcare counters, each adding color and resilience. Geographically, EEM spreads its bets across Asia, Latin America, Africa, and Eastern Europe. China and India provide the lion's share, with Taiwan, South Korea, Brazil, Saudi Arabia, and South Africa all making meaningful appearances. One share of EEM invites you to the world's fastest-growing street party without buying a plane ticket. Who might appreciate this ticket? Three groups stand out. First, new investors building core portfolios who feel their holdings lean too heavily toward home. Second, long-term savers hunting for growth beyond sluggish developed markets. Third, seasoned traders wanting a quick way to balance the ups and downs of domestic stocks with a dash of global flavor. Practical tips? Start small and steady. Automatic monthly purchases help smooth out emerging market swings. Pair EEM with funds holding developed market stocks or bonds to keep overall risk in check. Finally, set a review date. Twice a year is enough to confirm the allocation still matches your goals instead of chasing headlines. Remember, prices can swing like sudden monsoon rains, so give this investment time, 5 years or more, to let growth sunshine break through temporary clouds and keep your nerve. Just remember to research carefully, diversify broadly, and put in only money you can comfortably let grow through short-term turbulence along the way. Stay with me until the end, because here's the key takeaway. Diversification only works when you truly step outside your comfort zone. EEM offers that step in one click. It hands you exposure to semiconductors powering tomorrow's AI, banks financing new cities, and consumers joining the global middle class, all while spreading risk across more than 20 nations and 10 sectors. That blend of breadth and growth potential turns EEM from just another ticker into a passport stamp worth collecting. So, if your investment portfolio passport is craving new adventures, consider adding a slice of EEM and let the emerging world work for you. Just a heads up, nothing in this video is financial advice. It's all for information only. Explore more tips on money and investing at MoneyNova's website.